So good morning or good afternoon, depends upon where you're attending the conference from. May I first of all say a big thank you to my colleagues and friends in Temenos for affording DXC the opportunity to present at this very prestigious conference. I'd like to talk to you today about a new service that DXC has in market called Connected Bank-as-a-Service. And I'd like to first of all set the context in which we conceived of and built this product and brought it to market. I'd like to start with the results of a survey conducted recently by Spiceworks, in which they interviewed over 1,000 technology buyers and asked them what are the top IT challenges that they perceived their organisation faced in 2020 and beyond. The chart shows the top 9 challenges that they face. And surprisingly, the top 3 were maintaining legacy platform from an infrastructure perspective, maintaining legacy software, and the challenge of balancing the distribution of the budget between those run costs and bringing new net change improvement in the business. It's worth going back 20 years to the turn of millennium. 20 years ago, you could probably put businesses into one of 2 camps. Those that saw IT as a necessary cost evil for regulatory reporting, and those that really spotted the opportunity to invest heavily in IT and leverage some competitive advantage for their business. Of course, 20 years ago, we didn't have the cloud. We didn't have so many services, so many offerings as a service, and we certainly didn't have the bandwidth of capability that we now have with commercial off-the-shelf packages like Temenos. So the options back in those days at the turn of millennium was basically to buy a core, hire a development team in-house and bespoke the heck out of it. Of course, those businesses that did that and invested well and wisely genuinely took a lead in their market. Sadly, 20 years on, the reverse is true. Those businesses that invested so heavily are now left with huge technical debt. And that technical debt is consuming most of their budget, and therefore very little, all consumed as run and very little left for net new change. So against an industry backdrop of where over the past couple of years, and perhaps for the foreseeable future, we're experiencing lower than ever net interest margins, there's a constant downward pressure on costs. Yet the survey asked how many people expected to increase IT budgets. 44% of respondents said that they expected it to at least stay still, and 44% expected IT budgets to grow. Yet that's against the backdrop of smallest ever net interest margins, and certainly with the cloud of COVID-19, the Fed and other central banks have been dropping interest rates to the lowest levels for decades. So we expect that there's going to be continued pressure this year and perhaps in future years on net interest margins, and therefore we should be cutting costs, not increasing them. Yet that legacy of the technical debt is causing IT costs to rise. So what were the factors leading to the pressure on IT budgets? The chart shows the nine top reasons. And what I find most disappointing is only one of them addresses the issue of improving the business and growing the business. So the number 5 reason of the 9 was addressing revenue growth. I find that really disappointing. And it's just a demonstration of we're now servicing that legacy past rather than focusing on new product and new customer experience. About a century ago, Einstein defined insanity as doing the same thing over and over again and expecting different results. And it's amazing how often I spend time with my clients who ask me, Martin, we'd like you to respond to an RFP for 100 or 500 or 1,000 people, staff augmentation. We want them to sit in our premises, be part of our team to help us to continue developing our product. And I remember recently saying to one of our clients, I'd rather try to find you left-handed astronauts because there are more of them, because we live in a climate at the moment with the pace of change of technology where we're also grappling with a huge dearth of talent. There simply aren't the people out there to occupy all the seats that financial services companies want in their in-sourced teams. So we have to break the mold. How do we rise to the challenge of replacing legacy systems and platforms, meeting the modern challenges of today, yet with a dearth of talent available to us? And I think that success in the future is going to be based upon changing the model that we use. We looked recently at a survey that was actually conducted a few years ago by an American think tank, Tracy and Wearsema, and they came up with a model that they defined as the value disciplines. And they looked at the way in which businesses compete. And what they came up with were 3 distinct disciplines within the business: product, your customer responsiveness, and your operational excellence. And they took the view that any business needed to be able to compete, any business needed to invest in all 3 of those disciplines. And there was a threshold level at which, if you didn't invest, you weren't able to compete. But the real leaders in any segment were the ones that understood you can't lead on all 3. You have to choose one with which you lead, and that your primary investments need to focus entirely on the one discipline that you believed marked you out over the competition. Interestingly, if we observe then among our customers, what are the messages that we hear from our customers these days? There are many, many buzzwords, but right at the top of the tree now are digital transformation and things like process automation, and the list could go on. The point is, most people are focused on the bottom 2, operational efficiencies and cost controls, and improving customer journeys. Yet interestingly, is that why the client buys from you? Or is it that they buy from you because you've got a relevant product? So we would challenge as DXC, we would challenge our customers to say, isn't the competitive landscape today about having more relevant products in market sooner? And how do you compete against those fintechs that have emerged in the last 10 years and have got highly relevant products? They don't have the legacy of the platform that's been built over 20 years with that huge run cost to maintain. But of course, that's a very, very difficult equation to balance. How do we win new customers and get new products in market at the same time as keeping pace with the regulatory change, which again, in our modern world, continues to increase? And at the same time, in a world where post-COVID-19, we see unprecedentedly low interest rates, the Fed dropping the rate, the Bank of England and other central banks dropping to unprecedented levels, continues to put pressure on net interest margins. And of course, we don't know how long it's going to take the world economy to recover in the aftermath of COVID-19. So I think it's reasonable to predict that for at least another 12 months, we're going to see margins as low as they've been for many, many decades. So how do we improve our customer experience and get new products in market against that backdrop? And of course, there are other challenges to boot. Not least, there's a dearth of talents, as we spoke about earlier. And of course, ever increasing is the cyber security threat. So it's a very difficult equation to balance. And how do we solve it? Well, as Einstein said, trying to do the same things again many times over is probably not going to be the way to solve the problem. So we would contest at DXC that financial services businesses have got to stop thinking that they're going to be famous for owning and building the IT. They need to be famous for having the right products in market at the right time and being relevant to their audience. So we believe 20 years on from the turn of the millennium, it's time, and there's the right products in market and the right systems integrators like DXC to start consuming an end-to-end service rather than building and owning the IT for yourselves. So what have we done about it? Well, we've taken what we believe to be the world's #1 banking platform. And on top of that, we've worked with Microsoft to build the systems of insight and the systems of engagement that together create a complete end-to-end solution in the cloud. And we call it Connected Bank-as-a-Service. And why Temenos? Well, I suspect throughout the course of the next 2 days, most of you already know that. Temenos has won awards and is well regarded as the #1 core banking platform globally. What most impressed us as an SI when we looked around the market to choose the right partner was their commitment to ongoing investment in the product, their ability to deploy in many geographies with number of localizations, and therefore we were building a truly global platform that we can offer to our customers in all corners of the globe. So what is Connected Bank-as-a-Service? Initially, we're targeting retail banking, both B2B and B2C. So that's personal and small business and commercial banking. It's a complete end-to-end solution, and it covers all of those channels that you might need. So multiple channels of communication with the client, the front, the back, and the middle office. Where we worked hardest is on our deployment models. So it's available both as a project we can deliver for you to operate, but perhaps more interestingly, we offer a complete ITO service where we can stand up a service in the cloud for you, host that service. So no need for you to build connectivity with your existing infrastructure, and no demands on the existing IT team who've probably already got an 18-month or a 24-month program of works that you're not able to disturb. But perhaps the thing that's resonating with our clients most is the ability to supply a complete business process outsource wrap around it. So if, for example, you wanted to get in market with a new e-savings account, or you wanted to get in market with a new limited company buy-to-let mortgage, we can do that for you very quickly in the cloud without placing demands on your existing team and without having to train your existing staff on a new service. So we can completely supply that end-to-end with our own people, white labeled as yours. And perhaps for us, one of the most important aspects of it is speed of deployment. This is all commercial off-the-shelf software, which we already have fully integrated in the cloud, and therefore we can stand up a service in as little as 3 months. And perhaps for a complete retail banking solution, maybe maximum 12 months. So I'd just like to drill into what's contained in the solution. At the heart of it is the Temenos core banking solution. And thereafter, we cover an end-to-end client journey. So we start with our omni-channel suite, which is truly any device, any platform. So whether that's a mobile banking app on any telephone, using an internet portal, a client can start a journey through any of those channels. And on a single, fully integrated suite, that journey can transition, for example, into the branch or into the call center. So we have in the one platform the ability to take you on a digital transformation journey, whether that's call center transformation, digital channels transformation, or indeed branch transformation, including the ability to do origination in one fully integrated suite with one common backbone, which is the Temenos platform. Here's a little snapshot of what it looks like. This is our Customer 360 view, which has probably been the holy grail for retail bankers for 20 years now. And of course, we talk a lot about Customer 360. And Customer 360 is really about seeing all of the touch points with the client in one place. But a common frustration because of disparate systems is if I wander into the branch of my bank and I've, say, lost my credit card, they're actually able to see that I have a credit card with them, but they're not able to service me because they can't order a new credit card. I can't make a payment to the credit card in the branch because they don't have the systems in branch fully integrated across all the products. So in this product, you'll see all the touch points with the client highlighted. So I know what products they do have, what products they don't have. We have AI running throughout the suite. So to the right, I can see propensity to buy. I can see next best action. So in one single integrated suite, I can not only see, but I can sell and service across all products. And what I believe is the real differentiator is we don't struggle when we show people a fully integrated solution with Temenos and the Microsoft systems of insight layered on top. We don't struggle to get people to see the benefit of the solution. The challenge is we constantly frustrate the business by them saying, hey guys, we'd love to take that solution, but the challenge is we have an 18-month program already scheduled in, and we don't want to have to wait for 18 months. Well, of course, for me, the real differentiator is you don't need to wait 18 months because we have these 3 systems of deployment. So whether it's we supply project and you do integrate yourselves, or preferably we supply a complete end-to-end service in the cloud that we service, or even all the way through to we service it with our people answering the calls in your call center, white labeled as yours. And we can slice and dice that, whether it be by product or by function in your business. You may decide, actually, for certain reasons, for security, we'd like to host certain components in our own private cloud, and we'll host other components in your cloud. Either way, you can slice and dice, whether it's by product, department, or by function. So I'd like to share with you how our customers have been reacting to the proposition since we've been in market. The number one thing that they observe is it doesn't disturb their existing plans, and it's removing that burden of technical debt that historically they have built. It's also giving them a much quicker time to market with that new offer, whether that be a new customer journey or a new product. And of course, that's not just with the first offer, that's then increasing the pace of change throughout the life cycle of the business. So get more and more relevant products in market sooner. Of course, in any financial services business these days, capital is still constrained, and therefore often a barrier to change is the inability to access the capital. So we're offering this to market where we absorb the entire CapEx cost of it, and we amortize that over the life of the project. So a 3 or a 5 or a 10-year service where literally you have zero cost of entry. It's a pure OpEx model. So one of the common questions we get asked is, that's all great, guys, but does it mean I'm running 2 platforms? Well, no, it doesn't. You carry on running your legacy platform, and we run the new platform in the cloud. And the way we onboard you is, initially, we stand up a service for a new product. We build very few touch points into the existing infrastructure, predominantly around your need for regulatory reporting, but otherwise very few touch points. The second step is we wheel out our user interface to your middle and back office, so that it's a seamless experience to your staff, that they don't realize they're looking into the world of the legacy platform and the world of the new platform that we're providing. So it's a seamless to them, one single platform with which they're interacting. Once you've got that in, we can then accelerate the rate at which you put new products and services onto the new platform, which gives you longer term a controlled transition from legacy to new. So if you fast forward 3 or 5 years, you're going to find that most of your products and clients are on the new platform. And so that CIO career-ending scary project of re-platforming legacy is no longer quite so scary, because you've maybe got less than 20% of your customers and products on that legacy. And therefore, it's a very controlled migration to get you onto the new platform. So despite the uncertainty of the economic climate, despite the bumps in the road like COVID-19, and despite all those challenges around regulation and cutting cost and increased competition, we still think in the middle of difficulty comes great opportunity. And we believe that that's achieved by getting back to doing what you do best. Be famous for being a bank. Be famous for being great at offering great products and great customer experience. Don't feel the need to own the IT. Let us and Temenos do that for you. Thank you very much for listening, and enjoy the rest of the conference.